Hey, entrepreneurs. Zak Nordyke, founder of Evergreen Learning Center, back with you today for another installment of Zero to a Million. This video series is something I've designed to help entrepreneurs think through the different challenges you'll encounter growing a business from $0 to $1 million in annual revenue. This is a very specific set of challenges that you'll likely face. And one of the biggest challenges that I've encountered is setting up financial systems that can handle growing from a company that's doing no sales to $1 million. There's so much that goes into the preparation that I was not prepared for. And I just want to help anyone watching this who has these ambitions to be better prepared from a system standpoint, because there's nothing more disheartening than this, okay? When you're making fast money and it's amazing, but your systems aren't fast enough to keep up with the money that's coming in, and it really ends up slowing you down. Could you imagine going from basically making maybe 100,000 in sales to 800,000 in sales in 1 year? And most of you who are ambitious are probably, yeah, I can think of going from no sales to 100 million in 1 year. And I think that that's a wonderful mindset. But here's maybe a question to ask yourself. If you achieve that, would you have all the financial systems in place necessary to account for the $100 million in revenue that you've created? That was a question I didn't have well enough answered before I started. Thankfully, fast money is a great thing. When your business is scaling, revenues are coming in the door, your sales are growing, your business is flourishing. But the thing that a lot of entrepreneurs may not be ready for is all the financial systems, the accounting measures, thinking through compensation, incentive plans. There's so many nuances to not only getting to your targeted revenue amount or your targeted income amount, but making sure that you can stay there and grow further, okay? This is what I'm going to talk through today, my experience, and trust me, I've run into so many things that I would do different, or I would think through in a completely different way, because I just didn't know what I didn't know. And I hope that my experience can help you know a little bit more. Systems for growth. Okay. Again, maybe some of you are thinking about this more constructively before starting. If you have a business and it's in an early stage, I suggest strongly that you work with an outside accounting firm to set up really good bookkeeping practices from the beginning, okay? Evergreen has always worked with an accountant to do bookkeeping and for assistance on tax filings, and making sure that the contractors that we're working with all have W-9s issued to them, and they receive a 1099 at the end of the year. Okay, so I think we did a pretty good job of what I'll call having basic bookkeeping and accounting systems in place. But what I didn't realize is having an accountant on the outside of your business when you're probably anywhere from zero to maybe $250,000 in revenue is okay. Getting a report and getting your financial statement, getting all the financial information a month and a half after a month's ended, maybe 2 months, it's okay. You're not growing at such a rapid clip, and there aren't financial situations that are happening as much that require immediate understanding of what's going on, okay? But as you get bigger, if you cannot make accurate projections on how much income is going to come in, if you can't make accurate projections about like how you performed in the prior month, how much, what were your expenses, what was your income, did you have any net operating income flow in that you can now use towards your future growth, it becomes more and more difficult to operate your business in a way that can grow. Okay, so here's what I'm going to say about systems for growth. It's perfectly fine to maybe do your own bookkeeping in your 0 to 100,000 stage, as long as you know what you're doing, as long as you're tracking your income and expenses, If it's just you in the business, I think that that's fine. I suggest when you start adding other people, even if it's contractors, that you most certainly get somebody besides yourself to assist with accounting, even if it's what I'm going to call a second set of eyes. If you do not have someone helping you verify that you are accurate with your expenses and income, you can get yourself really hamstrung, whether it's on taxes or investing to grow your business. You might be falling short in a way that won't allow you to continue to grow, or where you don't have enough to pay yourself, or what you're doing is unsustainable, and in 3 months, basically you'll have no money left. And again, it seems like anybody who's looking at their bank account wouldn't run into these issues. But as entrepreneurs, we often are too optimistic about how successful our business is versus the reality. In accounting, and good accounting and timely accounting can give us more of a reality check if we're as profitable as we think, if what we're doing is as sustainable as we think, if what we're doing in terms of investing in new opportunities is really yielding the returns that we think. Do not allow yourself to be a jack of all trades as you begin to grow. Bring in an outside accountant or bookkeeper to help you. And then as you start crossing over that 250,000 mark, I'm going to suggest that you bring somebody in that can help you even more frequently than each month. Because if you're planning on growing well past that point, having someone really assist with projections and getting those financials, and getting your financial statements prepped in a timely manner is so pivotal. But we'll talk about that in a minute. Have systems to not fool yourself into thinking you're doing better with your business than you are. And don't allow yourself to get pinned down as CEO, CFO, all these titles as you grow. Bring in helpful people that can help you put in the systems that you need to make sure that the money that you're making is going to cover your bills so you can stay in business, and that you don't owe a bunch in tax that you weren't prepared for, or you haven't followed certain protocols that you need to be following. Incentive systems. Okay. The only reason to really have a business, in my opinion, is because you have a mission and you have a personal desire to use your own time to, I guess, be compensated in a way that would be much larger than what exchanging your time at a job would ever compensate you. Okay. So having great incentives in place and being very mission focused is two really huge reasons for entrepreneurship to exist. And probably some of the reasons that you've chosen entrepreneurship versus just, working at working a job, and working for another company. What I'm going to tell you about incentives is you got to really be careful. Sometimes when you have folks working in a sales capacity for you, you set a bar that you think is unreachable, and the team that you've asked to kind of reach certain milestones reaches them much quicker, especially if the incentive is lucrative for them. You might set yourself up, or you might set other team members up for what I'll call unsustainable incentives. What do I mean by this? Our organization likes to incentivize service hours, okay, that we get reimbursed for. And I'm not going to get into the mechanics or the exact situation, but I'll just give a high level thought process on this. We basically are making a certain amount of money for a certain amount of hours of service being delivered, okay? And this is a professional service that we're paid for. I never thought our team managers who are managing over teams that are delivering these service hours that we're paid for could reach a certain level of hours that they did. I thought, man, this is setting the bar exceptionally high. And if they get over this bar, I'd love to compensate them really well for being a big achiever. And it's going to help return a lot of income for the organization, and it's going to really make them feel like they're being well compensated. I thought, I set the bar really high. This is going to be so hard for them to reach. Maybe in a year they'll reach it. And But if they do, boy, the organization's going to do well and they're going to do well. I thought it was going to take a year for them to reach these targets. And then I thought once they reach those targets, okay, I'll adjust the incentive system, and they won't be mad because they're going to be doing well. They reach this major goal. They'll get all the incentive money that I planned for, and then it won't be a big deal. I'll just have a conversation with them. Hey, you broke through this target. Great job. Let's change this a little bit so, we can sustain giving you an incentive. It just won't be this incentive. Don't do this. Have a conversation if you're going to incent salespeople or marketing people or really anyone in your company to reach a certain milestone. Don't act like you can change an incentive system because people reach it quicker than you anticipated. Anticipate that they will reach it and know ahead of time what you're going to do in terms of changing that incentive system. Anything that has to do with people's pay, a quick change one way or another can really either upset them or get them overly optimistic in a way that could lead to lack of sustainability. Okay. Be clear with people. This is what's going, like, this is our goal for now. Once we reach this goal, this will be our new goal. Once we reach that goal, this will be our new goal. Once we get here, we're going to change to this percentage. Don't leave incentive plans like, hey, well, it's going to take a long time for us to reach this goal, and I won't know what the next step is. I'll just negotiate and talk that through when we get there. Don't do it. Okay. We crushed the goal that I had in place. That's a good thing. Okay. What I learned, though, is now I've got the incentive system's too generous. Okay. Now I've got to wind some of our folks that we're getting compensated back. It's not that it's making us unprofitable. It isn't. But as we grow, we need money for new systems, new personnel, new compliance things, etc. And that's draining, right? They're feeling super well incentivized to do what they need to, and that's great. But it's really sucking income from other things the business needs to grow, right? So don't be too generous with your incentives and hurt the other operations or other parts of your operation. And also, don't think that people can't reach the goals you've set. You might be surprised, like I was, foolishly, that people will get there and way quicker than you think. And when they get there way quicker than you think, if you have to adjust them, it often leads to a really uncomfortable conversation where they're used to a certain type of compensation. Now you'll have to dial them back or change the parameters. Not good. So make sure you've really thought through your incentive systems. You know what it's going to look like in the future, and that those incentives won't drain other parts of your operation if you happen to hit those lofty targets you've set. Here's one that entrepreneurs that really love to sell and grow businesses may not be a big fan of. I know that this is a kind of a challenge for me. It always feels slow and tedious. Compliance. This could be complying to various labor laws. This could be complying to certain taxation policies. This could be complying to rules that are specific to your industry. Okay. As you start a business and you kind of get the business off the ground, you may not have to think through who should be a W-2 employee of this entity and who should be a W-9. Okay. No one's probably making enough money or putting in enough time for that to be a big debate. But I'm going to tell you, at some point, you will have to address, okay, this person is working this amount of time for me and putting in these hours and has these responsibilities. We need to classify them as an employee. Or this person's working periodically for us and they work 3 other jobs and they just have this scope of work. They can be a W-9. I can tell you, I was really not thinking through that. Everybody was working with us on a very part-time basis, kind of making what we were doing a side hustle. All of a sudden, we expanded greatly. We needed management. We needed other roles to be filled. And it really blurred the line. Are these folks contractors? Are they employees? The difference in terms of withholdings and payroll tax and tax implications on these two roles and having them right or wrong is significant. This is why working with a person that's familiar with employment law or HR policy, or just really good at accounting and employment related topics is so pivotal. You can hurt yourself from scaling as quick as you need to with being poorly informed, as I was, and I still am not the greatest at it, with all aspects of employing people or scaling up a team and all the things you need to know about the employment agreements that you have with them or the contractor agreements that you have with them. Make sure you're not breezing over this. It can really impact you. In order to run a payroll that has all the different components that an employee needs is going to be resource intensive. Contractors, not so much, but make sure you know, yes, this person definitively meets the description needed to be a contractor. This person definitively meets the description needed to be an employee, and be prepared if you have to employ people to have a handbook that covers, all your personnel policy as well as time off and, if you're going to offer benefits or not. It's not the most glamorous part of entrepreneurship from my perspective, but it's one if you're ill prepared for. It could sink a business that's doing great things because you just didn't think through, all that needed to be considered as you actually reached your goal, which is to make money and have a business that contributes in whatever way you want it to contribute. And you wanted to probably have people help you on this great mission of yours. There's more to it than that. Also, if in your sector you have to comply to some type of standards, transportation, U.S. Department of Transportation, some type of healthcare rules, etc., be familiar with those. And I'm going to, again, encourage you. This is not only from a financial system standpoint, but from a compliance standpoint, to have an attorney and maybe some type of consultant that is an expert in the compliance. You don't need to have them on a retainer, but pay for their knowledge and expertise to keep you from getting some type of letter from a governing body saying, hey, you're not doing this right, and there's a fine or a fee associated with it. Think through as you get bigger, hey, if the spotlight's intensely on me, are all my employees and contractors classified correctly? Do I have a person or do I know enough about this to manage that well? Okay. I'm going to give you some vocabulary if you're an entrepreneur to think about. There's an entity called a PEO that employs the worker that will work for you, but they help furnish all the HR pieces, the handbook, the withholdings, the benefits. They basically oversee your employees for you so you can concentrate on getting the right people and operating the business versus all the HR and payroll related matters that come up. So make sure that you're familiar with a PEO. Make sure that you have a good attorney in place for things related to labor and compliance. And it's going to cost you money. I'm sorry. If you're going to be ambitious enough to create $1 million entity, it will cost money to have the right folks in place and the right services in place for you to stay compliant. I've been guilty of being frustrated at those costs and feeling like it's just a big waste of time. But in order to stay in business, you've got to think about it. Compensation. When you start to make money, especially if you have other team members, they will want to be compensated as the business grows, right? They may have started out doing just a few hours a week or a month for you. Their role may have expanded. They see that the business is doing well. They feel like their contribution has helped it to grow. Be prepared to work with your team on defining a role and having a compensation structure commensurate with whatever that role is. Again, entrepreneurs, speaking for myself or my experience with other people who operate business, grab people, pay them what we think that they're worth. Yeah, I think we're compliant. Ask the lawyer for 30 minutes. Do you think that this is good? Yeah. And just keep going. Let's sell more. Let's worry about bringing in new business. Let's worry about that person's salary tomorrow. Regrettably, if you want the business to last and you've not put in proper thought into compensation, you're going to end up spending a lot of time. And this is the regrettable part, not paying people. That's necessary. If you want people to stay, you got to pay them, and you got to make sure that their compensation is tied to something key that you can measure that's going to keep the business growing. But the regrettable part is you're going to slow yourself down by not thinking about this in a proactive manner. What are the roles that these folks are playing? What should that merit in terms of compensation? How do the things that you're measuring or they're doing for you loop back into the business's growth financially? Or what does it do for your business to be able to grow financially if they aren't direct financial contributors? You cannot wait till somebody's begging you for a pay raise and threatening to leave to think this through. And it is painful because we're so tied down with other challenges that we need to address, like keeping the money flowing in, and then it's like more money flowing out. That feels like a lot of pain. Yes, but we need to think about what it's going to take to keep the people that are working with us there with us to continue on the mission. And yes, compensation is one of those huge things that keeps people with us. It's not the only thing. Maybe they love our mission. Maybe they just love the environment. But you cannot deny people have to pay their bills. People have to make a living for themselves. If their role has dramatically changed as you're growing, we think that they're going to always stay maybe at that income level that they began with us at. That's a poor assumption. I was thinking too much in the here and now. People's roles will expand, especially if we've grown to trust them and added more responsibilities to their plate. Think through that compensation so you can keep them on with you for the long haul, especially if they have been adding a lot of value. One way that I've been able to address things like this, and I'm learning to work with a person like this, is bringing in a fractional CFO. That's a fractional chief executive, or I'm sorry, a chief financial officer that basically can help you as a chief executive officer, or whatever you want to label yourself, a founder, a business owner. Your financial officer can help you think through this. And they've been probably through a lot of these situations with other businesses they've worked with. So they have great knowledge of systems. They can help you think about compensation. They can help you think about compliance. They can help you think about projecting so you keep your income and cash positions in a healthy position. They can just really assist you in not being the only person thinking about financial states. Okay, this is a person that is going to add a lot of value if you bring them on where you can afford them. Okay, once you start crossing that $500,000 mark in revenue, a fractional CFO may be needed versus a bookkeeper or an outside accounting firm, so you can rapidly stay on top of all the financial decisions you need to think about, and they can help co-work on just keeping you, I guess, down to earth on where you're at financially. It helps to have somebody in there that at least each week can meet with you and go over those things. Projections versus reality. Whether it's an outside accounting firm or a fractional CFO, if you don't project where you're going to be, which we usually do, at the end of this month, we'll have made this much income. And if you don't compare that to the reality of what you're really doing in a healthy timeline, meaning you don't respond to it, oh, hey, we overdrew our bank account, that's not a good sign. And if you do it, you should hopefully know that you're in jeopardy of doing it or you're on track to doing it, and you don't just get maybe a text from the bank saying, your account's overdrawn. Okay. We need to have a healthy timeline. As your business makes more revenue, you need to know probably every day, here's where we projected where we would be financially, here's where we're at. And in the earlier stages, it's probably not that important to be that on the pulse, but as you grow, where your dollars go is huge. If you have a big payroll, or if you have a lot of expenses, okay, If your projections are off on your income by even a small percent, you can be in the hole thousands of dollars, tens of thousands of dollars, maybe hundreds of thousands of dollars because you weren't, I guess, on the pulse enough of what you were projecting you were going to have as expenses and income and what the reality is. So have somebody help you do a sanity check on those things. It doesn't matter if it's an accountant or a fractional CFO or just somebody in your business that you have allowed to see your books. I would suggest not being the only set of eyes. We like to fool ourselves and we think we'll get that before the 30th, or hey, we're going to make 10 extra sales. Great. Love the ambition, love the optimism. But boy, contractors can get really upset when you don't pay them when you're supposed to. So know if you're going to have a problem. We're all going to run into them. No one's immune to it. But if you don't know and it catches you by surprise, you're going to have a lot of really rough conversations with those that you owe money to. And that might break their trust and really hurt your business. Payroll system. As you add more and more people to your business, whether it's contractors, employees, outside vendors, and service providers, whatever, you're going to have a hard time if you don't have a payroll system or a payment system that allows you to do ACH. That's like electronic movement of money, or automatically issues the 1099 to contractors, or allows your team members to log in and see where they're at with their benefits and withholding. If you're doing something like paying people with a paper check, and I don't know how many people do things like that, or if you, and this is not intended to be a joke, I was using Cash App and Venmo to pay some of our contractors in the early stage. So don't think I'm looking down on this. It was what we needed to do. You need to, in my opinion, think through how many people you're going to be paying out, how many invoices you're going to be paying, how much income you're going to be receiving, and get a tool. I don't care if it's Gusto or JustWorks or Quanta, or Kronos, whatever, or I don't know if QuickBooks can do some of these things, but you need to have a system that allows you to pay out a lot of people and keep track of everything. If you don't have a payroll system and you grow quickly, people are going to be looking for their money and you're going to be burning up so much time withdrawing money, writing checks, and tracking it's going to be a nightmare. Get a software tool that can help you make this easier. And preferably, if you have the money, get someone who's an expert at operating that software tool and tracking it and connecting it into a QuickBooks to make your life more organized and seamless. You don't want to be thinking about paying bills, paying your team members. You want to really be thinking about growing the business and adding to your bottom line and finding the best talent possible, in my opinion. But maybe your strong suit is doing payroll. Make sure you have a good system. Make sure it's great software that makes that part of operating the business easy. Final thing that I'm going to talk about today is budgets. You don't really have to have a strict budget. I think when you're early stage, you can just look in your bank account and know if you can do it or not. It becomes more important as you grow to have a budget because it's not always clear. Sometimes you'll have enough money to do what you want to do. Invest in new software, add a new line of business, bring on a team member, right? But what you're not thinking through if you haven't budgeted is this an ongoing cost or is it a one-time cost? If we do this today, in 3 months, will it still be sustainable? You need to think through the longer term impact. Again, you got $100,000 business, you're going to, there's not very many variables to it. I'm just saying, if this is the case, there may not be that many variables to it. You know that you can do something or not. As the business grows in complexity and there's more expenses and there are more variables, if you've not budgeted, you'll have no idea if your business can sustain whatever it is that you're wanting to do over the long haul. So in the journey from 0 to $1 million, there are so many considerations that unless you've taken this journey before, it's going to surprise you. Hopefully my video today is going to cut down on some of your surprises and allow you to flourish as you reach the ultimate entrepreneur goal of having a business that provides more income for you and your family than a regular job. But just know it comes with a lot of knowledge and a lot of learning. So hopefully this helps, and I will see you on our next video.